Felicity. I'm now going to go to Rushanara, then Mike. So Rushanara, please.
Good afternoon. So I want to focus my questions primarily on household debt, and both of you, the panelists, have already touched on this. But back in July, there was a report suggesting that UK households face £6 billion worth of debts because of COVID-19. That was work done by Step Change, and I'm sure CAB might have been involved too. Could perhaps with Matthew, if you could start by talking us through which groups have been particularly hit hard by the increase in debt because of COVID. Well, obviously we know that some people, those who are better off and who've been able to work from home, their savings rate has gone up, but it's had a detrimental effect for others. So could you just talk through that? And also if you could reflect on any regional inequalities that you've been made aware of, that would be helpful.
Yeah, of course. And I think your last point is the place, or your last but one point is the place to start in the unequal nature of the crisis in terms of the financial impact. Martin made this point very well. Some people have increased their savings, and others have seen them what little they had whittle away. So we did some research on the number of people that have fallen into debt after the first lockdown, and we're looking to refresh that in the next week or so. So after the first lockdown, 6 million people had fallen behind on at least one bill. In terms of the disproportionate impacts of that, as you mentioned, they are at least twice as likely to have fallen behind on a bill if they are black, if they are disabled, if they are a carer, or if they are a key worker, which is slightly worrying and troubling when you think about the praise heaped on key workers over the course of the crisis. I think we've delved into some of this as well, and to see, when you look at breaking down budgets, how significant is this problem. And one of the things that worries me most is we did an analysis of 20,000 of our debt advice clients that we've helped. And this year, 40% of all the people that we've helped with debt advice have what you call a negative budget when assessed by a debt advisor. That is not a subjective assessment by the individual. That's an objective assessment which says that their income cannot meet their outgoings. So it is basically impossible to get by. 40% of people, and going back to the issue around self-employment earlier on, 58% of self-employed people that have come to us with debt advice have a negative budget versus 40% last year, which feels absolutely terrifying. I think the worry on this is that because of the schemes put in place by government, which have been effective in many ways, whether it's the JRS or the various payment holidays and things that we talked about, you've effectively stemmed the tide of debt over the last 8 months, and it's going to explode once redundancies increase. People have been whittling away their savings, as I say, and it is only going to get worse. And I think my main message to the panel will be, I think personal household debt will be the next big policy crisis that we're all discussing over the next year.
Okay, and do both of you think that given the looming problems ahead and some of our own observations of what we've seen over recent months, that there is a case for government needing to look at universal credit and statutory sick pay? Martin, if you could also reflect on the perspective of employees, particularly in among small businesses as well as others.
Okay.
Shall I come in first, Martin, or do you want to go first?
Yeah, no, you go first, Matthew. Yeah.
So, yeah, on your point around universal credit, very much agree. The people will, hopefully the panel will know that at the beginning of the pandemic, the government raised the basic rate of universal credit and working tax credits by £20 a week, and for our clients, it's been an absolute lifeline, hugely impactful, has made a phenomenal difference in terms of keeping those families out of poverty. And what our own research suggests is that if you took that lifeline away, 75% of the people that we help with benefits wouldn't be able to cover their basic costs So we know it's being looked at the moment, and we think it's essential that in the spring, I think the announcement could be made sooner, but in the spring that that uplift is made permanent. In terms of sick pay, this is an incredibly challenging one, and one of the biggest worries that we've had is about the extent to which the dilemma faced by people needing to self-isolate. It's an incredibly complex system. You're basically faced with 4 options for financial support. If you're in that position, it's confusing. There are hugely differential levels of income, pay, depending on which one you take. And I think it's often leaving people with what is effectively an impossible choice between protecting their own health or the public health of the nation and working. And it's obviously one that the government have been grappling with throughout the entire pandemic. So if you look at, say, statutory sick pay, obviously for those who aren't lucky enough to be in jobs where their employer has schemes in place already, for a full-time worker earning living wage, statutory sick pay effectively equates to a 69% weekly loss in earnings. It's well documented that we have one of the lowest rates of sick pay across the Western world. So huge challenge, hugely complex system, and a lot for the government to look at there, I think.
So would you, maybe over to Martin on this, but would you agree with the TUC suggestion? When they gave evidence, they suggested that it would be preferable to move it to £300 a week instead of £94 a week, which the health secretary at the beginning of the pandemic said he couldn't survive on.
Well, yeah, I understand that call, but I'm concerned about the effect it has on people's behaviour in this pandemic, because faced with the alternative of going on to statutory sick pay, they are likely to take more chances. Yeah. I only spoke to a self-employed hairdresser the other day who said she had deleted the NHS app from her phone because she didn't want to be called by NHS track and trace and prevented from working. And I think a lot of people are making that kind of choice. In direct answer to your initial question, the thing that worries me the most is that almost half of small business owners say that they're using personal debt to try and fund their businesses. And that's significantly up to the situation or position it was prior to the crisis. And there's also quite a lot of evidence that people taking out bounce back loans for their own businesses that's having a negative effect on their credit rating. So this is compounding the situation for a lot of self-employed people who are trying to run businesses and finding that this debt is mounting up as they get through the pandemic.
Right. So we at the next year we are likely to see debt mounting up. People then facing debt collection agencies. And I just wanted to come back to the point about debt collection. Even public services, whether it's HMRC or local authorities to recover debt, have historically used and continue to use bailiffs and so on. Do you think, Martin, for both of you actually, Martin and Matthew, do you think that there is a case for radical reform of debt collection so it doesn't do further harm? I mean, the pandemic has already done people a lot of harm. And while we all accept the need to recover debt, should there be a proper review of that? And secondly, should there be better regulation of debt collection agencies? I mean, in theory, my understanding is that the FCA is supposed to regulate them, but they have a lot on their plate. What else could be done to improve that particular agenda?
I can start there if you like. I mean, the thing that strikes me about it is that the big banks set themselves up what they call a utility for collecting bounce back loans and CBILS loans payments and people in default. And they're doing that because they recognize that there is a sort of a Wild West element of the debt collection agencies. They're trying to get a consistent response to all the people affected by this. And they also know that this will be a massive problem in the next few months. So I think you're right to be concerned about the methods used for debt collection. And I would suggest that the move the banks have made shows that there is a problem in the system.
Matthew?
Yeah, two very quick points on this. Firstly, on bailiff regulation, I think it's, as you say, it's entirely unregulated. I think it's a huge problem. We've called on government for some time now through the MOJ to establish a regulator to oversee the activities of bailiffs, and I think that will only become more prominent as the impacts of the pandemic are felt in the way that you described. So very much support that. The final thing I'd say on it is, so I think it's often people present this as a sort of zero sum between or trade-off between, you know, collecting debts and getting the money in the door versus looking after people's welfare. Yep. And I think it's an incorrect way to look at it. One of the main reasons financial services collect their debts in a much more humane way, which looks to respect where people are at, less use of bailiff and so on, is because they understand how to get money in the door. It's as much a commercial decision as it is a welfare decision. And I think the sooner that government agencies and local authorities realise that bailiffs are just a poor way to collect money for the bottom line, as well as for the welfare of their constituents, their residents, I think the better.
Okay, thank you. So your argument is there should be a separate regulator that regulates debt collection agencies, and they couldn't come soon enough, and one for this committee to push for. Is that a yes?
Yes, very much so.
Okay.
Yeah. I think there's a question with all this stuff around whether it's attached to existing regulators or new bodies, which I think is a debate with.
Okay. Just one final thing. We talked earlier in response to Anthony's questions about loyalty penalties. So how many, has anyone done any work on how many vulnerable customers fall into the loyalty penalty trap, whether it's Sky Broadband or others, insurance and so on? And secondly, has there been any work done in relation to, I mean, one of the advantages of having a direct debit, I'm sure we've all done it, we all do it, having a direct debit for your home insurance or car insurance or building insurance particularly, is that you're not gonna have a gap. And lots of people who, ordinary consumers, even if they're not vulnerable consumers, will just do that to avoid any gaps, which is risky. Has anyone done any work to look at some of the motivations for sticking to the same organization, same company, and also how many people are vulnerable who are falling into the trap of being charged an extortionate amount of money, which frankly amounts to profiteering by companies like Sky, as well as certain insurance companies, that really just is unacceptable.
Yeah, so I'm happy to come in on that. So the CMA did quite a lot of research into this as a result of the super complaint that we made on this topic, and they estimated that it was just over £4 billion a year is being overcharged to what they've termed loyal consumers, which is split across 5 different markets. Some of the ones that we've discussed today, such as broadband, mobile, mortgages, etc. And also that in almost all of those markets, those people are predominantly more likely to be vulnerable in the way that you described. Obviously, more likely in terms of that they are vulnerable, but also obviously a disproportionate impact because of the proportion of their incomes that they're spending on these bills. So very much agree. That's why we're pushing for intervention in those individual markets to protect those more vulnerable consumers, whether that be in broadband or whether that be in mortgages. And we're hopeful when you look at some of the action that's been suggested in insurance. I'm not sure if this is one that's been looked at by the committee yet, but the FCA are putting forward some fairly robust measures there, where you will all, I'm sure, do your insurance renewals on an annual basis, and they're suggesting that you cannot be charged more than a new customer, which could save all of us hundreds, make a lot of difference to the clients that we see, and we hope they do take action there. In terms of your question around what are some of the barriers for those more vulnerable consumers, why do they stay there? One of the things that always comes out as a disproportionately big barrier for the more vulnerable is the risk around things like getting cut off. So whether it be I'm that much more worried about the impact of a wrong perception of having my energy cut off, because that's not what happens, but in a sense the risk is seen as bigger to switch provider. So people will often stay even if they are overpaying because it's not one they want to take on. There are also complex issues around having arrears as well, which makes switching in some markets more difficult.
Thank you. That's great. Thank you very much.
Thanks, Rushanara.